Welcome back, folks, to 3 at 3. I am Jon Najarian, and every day at approximately 3 p.m. Eastern Time, I jump in here with you and give you some unusual activity. That unusual activity in the shape of calls, which would be bullish, or puts, which of course would be bearish. We're really just tracking big institutional-sized buys of calls or puts. That's what we care about. That's probably why you tune in. So let's get to it, shall we? So there it is, 3 at 3 with Dr. J. We're talking about what we've seen in the markets today, as well as maybe a short recap of trades we've already done. If you'd like to learn more about trading stock, options, futures, or cryptocurrencies, you can go to marketrebellion.com/get started. There we have online learning, so you don't have to be just dialed in at a certain time to listen to a lecture. You can do it anytime, day or night, and we've got a test at the end of each chapter that we do. You have to pass the test before you can move on to the next chapter. That way we know that you know what you think you know before you move on, which means that we've increased your chances of success rather dramatically. All right, you can find out all about that, marketrebellion.com/get started. All right, speaking of getting started, can't do that before I give you the disclaimer, which says that these services are for educational and informational purposes only. Full stop, end of story. So as you know, the Fed decided today to speak to us. This was a scheduled Fed with Jay Powell, as well as question and answers afterwards as Mr. Powell addressed the audience. He sees, and he says, speaking for the Fed, interest rates staying near zero through 2022. Let me reiterate, near zero through 2022. That's going to be bullish for equities, believe it or not. Now, are we, as far as both the Fed and Congress, are we digging ourselves a pretty big hole? Yeah, but having low interest rates is obviously decent for us in terms of paying back that money as well. So let's focus a little bit at least on that side of the equation. So where are we right now then? Well, we were negative about 160, 180 points. We'd been negative 300 during the time when the Fed chair started his speech. We turned negative. And went back south after being positive for the Dow. Right now, the S&P is down 12 points, and the Dow is down a little over 200 points. Let's get to Microsoft. Why? Because yesterday we talked about it when it was $188 a share. And we said, you know what? We're seeing a lot of July 10th expiration, which is the second expiration in July, folks. So the first would be the 3rd, then the 10th, then the 17th. See how I did that math? Because the third Friday is the regular expiration. That would be the 17th. And then they have weeklies because Microsoft is so popular, as certain stocks are. You follow that. They get more volume and they get more demand for these quick trades in and out. But this one, they don't want to be in it just this week or next week or the week after. They want a full 5 weeks into this one. So they were buying the July 200 calls. Where'd the stock go today? Oh, it went from 188 to 198. Bang! It's my second biggest holding. And I think Microsoft doing a great job, obviously. I tweeted my friend Eben Shapiro, who's a writer and editor, I believe, over at Time Magazine, had a great piece with Satya Nadella. Encourage all of you to check it out over at Time. Anyway, Microsoft up $8. So if you put $190,000 into this one yesterday. You controlled 1,000 shares. If you bought those calls yesterday, which were trading for, let's say, $2, that's $200 since every option's for 100 shares of stock. Now, 1,000 share equivalent would be $2,000. So which would you rather have had? $2,000 investment or $198,000 investment? On your $198,000 investment, you would have made basically $10 or $10,000. I think you did pretty well with the calls in here with only a $2,000 investment. But you guys check my math on that. All right. I said to Vinny, my friend cousin Vinny, that I would give him a shout because Vinny was also tweeting me back about a stock that I used for unusual activity at halftime, which would be Teradata, TDC. And he said, yeah, sometimes, he said, I assume you realize Mr. Najarian is simply pointing out institutional flows. Yep, that's what we're looking for. I'm not caring about, I mean, I root for you if you're trading through Robinhood or any other online site, folks, but I'm not following you. I am following unusual activity, which is normally bigger. And as Vinny points out here, 17,000 contracts of those 25 calls in June changed hands. And earlier in the day, the June 2250s were also extremely active. Let's look at about 13,000 contracts. What did we see? Well, as you can see here, when the stock was under 22, we were citing the activity in those June 2250s and the June 25s. And where did it go? Well, Teradata went through 24. You can see there when I mentioned it on the halftime report, the big spike that all of a sudden occurred, and then ran even higher after that. Now, let's get to some fresh meat, shall we? You want to learn more about what we do at Market Rebellion? Check out marketrebellion.com/UOA. That's marketrebellion.com/UOA, which stands for Unusual Option Activity. All right, IWM. How about this one? Since every option's for 100 shares of stock, when you see 32,000 options go off, that's a pretty good sign. That's 3.2 million share equivalent for about 75 to 80 cents, rough terms in between those two areas where you saw there from the low to the high. So this was an opening new trade. It's out there in June. It's a little over a week and 2 days into the future because they're not the June 12th expiration calls. They're the June 19th expiration. How do I know that? Because that's what we wrote, June rather than June 12th, which would be this Friday, just 2 days hence. Instead, these are more than that out into the future. So that's a pretty big trade, folks. That's just right around $3 million worth of stock. That's not stock, $3 million worth of option premiums, controlling 3.2 million shares of this ETF that's trading at 147.64. There's a graph. As you saw, went from 147.64 up through 149 briefly today. Keep an eye on this one. I am in these calls. I turned it into a call spread. Bang. Let's look at our second of our 3 at 3. Lennar. I used it for my final trade on the show today. Why? Well, low interest rates are one reason, but as you see here, we saw the June 65 calls being bought for $1.70. Since every option's for 100 shares of stock, that's $170 per option. And then those June 69 calls were sold. So in other words, this trader established a $4 spread. How is that a $4 spread, John? Because you have the right to take it from someone at 65, and you've given somebody else the right to take it from you at 69. The difference between these two strikes is $4. So that's the most you could make. You paid $1.70 and you collected, let's say, 50 cents, which means that you're into it for $1.20. But wait a second. See that other part of this? they went in there and sold the June 57 puts for $1.20. So guess what? As far as dollars into this trade, they have $0 into the trade. Why? Because they paid $1.20 for that call spread, and they collected $1.20 for the put. Naked sold that put. So, not saying you should follow right along with that, but I'm pointing out that they have zero money invested. Now, it costs money to hold this, however, because the call spread has to be fully paid for, which it is. The put is naked, which means that the seller of that put is obligated to potentially buy the stock at 57, no matter how low it goes. So your broker will demand that you have money in the account to back up such a bet. So that is our second trade of our 3 at 3, a bullish three-way in Lennar. There's the stock trading up through 64. There it was when we saw it this morning at 61.90. It's kind of driving home a point, isn't it? That you'd like to be on these trades when we first see them, right? Well, to do that, you need to be a subscriber, my friends, because my mama didn't raise no foos, and we need to have a little revenue for supporting our firm, Market Rebellion. And you can join up anytime you want by going to marketrebellion.com/UOA. Let's get to the third 3 at 3. Let's get to, where is that? There we go. Overstock. I don't know why I had those old slides in there. But Overstock, there you see they're buying calls in Overstock. They're going to have earnings in the not too distant future, but they're buying options that expire this Friday. I don't believe that Overstock has earnings before this Friday. Nonetheless, somebody wanted to buy 5,000, which is 500,000 share equivalent of shares in Overstock. And at the 25 strike, with the stock trading 23.72. So keep an eye on them. They basically almost doubled their money already because, as you see, the calls were started to purchase at 78 cents, and they purchased them all the way up to $1.45. So that's nearly a double. I know you guys can do the math. And where is the stock now, by the way? 23.70 was 23.72. So it's literally lockstep right where it was when we cited that unusual option activity. All right, so with all this said, folks, I hope you enjoyed the 3 at 3. Certainly our pleasure to present this information. I hope wherever you are that it ends up being a fabulous day. And if you'd like to learn more about what we do as far as unusual option activity, check that out, marketrebellion.com/UOA, or you can go right over to marketrebellion.com/get started to learn all about what we do. You want to learn about stock, options, futures, crypto, we've got it all. You can check it out at marketrebellion.com. Bang! Thank you for joining me today, folks. I hope you have a great day. Look forward to being with you tomorrow. I think my brother Pete is on the halftime report tomorrow. So instead, I'll just be doing the 3 at 3 with you, as well as a great interview, I believe, with one of the folks who's making the magic happen at Kraken, that big cryptocurrency exchange. So we'll have that tomorrow, right after 3 at 3. Make sure you tune